Hello and welcome to Project Trade. This is the price structure show, and in this one we're talking Heikin-Ashi candles. Yes, we candle. Heikin-Ashi, they are not like the other candlesticks. The original candlesticks we all know and see are Japanese candlesticks which were developed by Munehisa Homa, the 18th century rice merchant who traded out of Dojima Rice Market in Osaka. They use an open, high, low, close format, and each of those elements represents a different part of the price within whichever selected time frame. Here are our typical candlesticks, what they look like depending on whether price went up or down in the given period. On the left we have a candle where price went down in that period. The main body of the candle, as it's known, is the distance between the open price and the close price. The open being the initial starting price of the candle and the close being the last price of the candle. Then extending from the candle's body, those thin lines leading to the high and low, they are called the wicks or the shadows of the candle. At the peak of the upper wick we see the highest price of the period, and at the very bottom of the lower wick we see the lowest price. If the high and or low of price are the same as either the open and or close, then the candle simply won't have an upper or lower wick. On the right then we have a candle where price increased for the period. The high and low of price are the same as they are for a downward candle, but we can see at the body of the candle that the open and close have switched places. That's simply due to price going upward this time. Those are our typical Japanese candlesticks. What about our Heikin-Ashi candles? Also created by our rice boy Munehisa Homa, the candlesticks aren't looking any different right now. We can see they are much like the traditional candlesticks, as Heikin-Ashi candlesticks also use a body with upper and lower wicks. You've still got an open, a high, a low, and a close, but those same elements are calculated differently to how the Japanese candlesticks do it. Let's start with the high, which is the maximum reading from either the high of price from the current period, the open of the Heikin-Ashi candle, or the close of the Heikin-Ashi candle. The low of the candle is just the opposite, the minimum from either the low of price from the current period, the open of the Heikin-Ashi candle, or the close of the Heikin-Ashi candle. The open of our Heikin-Ashi candle is calculated as the previous candle's opening plus the previous candle's closing divided by 2. This naturally gives you the halfway point of the previous candle, so a new candle will always open at the middle of the body of the previous candle. Then finally the close takes the high, the low, the open, and the close of price for the current period. That's all 4 of the price elements. It adds them together and divides that figure by 4. This gives you the mean average of price for the relevant period. That's all the calculations of a Heikin-Ashi candle, but what does any of it mean without seeing the final product? There we go, we've tweaked the colors slightly to stand out in comparison to the normal candlesticks, with the blue candles here indicating an upward move and the orange candles indicating a downward move. But even from this chart we still can't really tell what the Heikin-Ashi candles are actually doing compared to the standard Japanese candles. So here's a comparison of the two side by side, both being applied to identical price action. On the left we have our normal Japanese candlesticks. There's a clear uptrend of price occurring, but we can see along the way that the candles switch pretty regularly between green and red as price takes a period or two to consolidate itself. But on the right side the candle pattern is much smoother. We can tell how the small retracements of price, they are not enough to throw off the overall trend of the Heikin-Ashi candles. It's easier to follow what's occurring as an overall trend through them, a more holistic candle as it were. And that is the essence of Heikin-Ashi. It's simply trying to be smoother than traditional price candles, easier to interpret over a longer period of time, and quite often it succeeds at that. Heikin-Ashi candles are available for use in all time frames, just as the Japanese candlesticks are. If you want each Heikin-Ashi candle to represent 1 minute of time, that's absolutely fine. If you want each candle to represent a month, that's fine too, and all the time frames in between, those are also fine. Everything is fine, within the established confines set forth by your trading platform, that is. There's no settings you can change for Heikin-Ashi candles. The formula we've been through is the fixed, locked-in formula, but you can change the color of the candles if you want to. As you saw in our example charts, we like the blue and orange to distinguish it from the traditional green and red, but go with your gut on this one, whatever you feel best about. Get crazy with it. Just probably don't use the same color for both candle types. Okay, so now we know all about how Heikin-Ashi candles work. What entry signals can we actually take from them for our trades? The simplest signal is to say that you will enter a buy trade if a new candle forms which signals an uptrend, or enter a sell trade if a new candle forms which signals a downtrend. For us that would be a blue Heikin-Ashi candle to buy and an orange candle to sell. But if you are not convinced that one candle is enough to fully confirm that a new trend is forming, then you can wait for however many candles you choose to help verify signify the move. 2 upward candles, 5, 10, whatever you feel comfortable with. Through their individual structures, the Heikin-Ashi candles can also signal to you the strength of an ongoing trend. If there's a strong uptrend in motion, then the Heikin-Ashi candles will likely have no lower wicks to them, and vice versa for a downtrend. A signal of the strength to that trend is that the candles have no upper wicks. This could be a part of your entry signal that you will not enter a buy trade if the entry candle has a lower wick. Or just the same, you won't enter a sell trade if the candle has an upper wick. And don't forget, there is always filtering as well if you don't want to use Heikin-Ashi candles as direct entry signals. Again, a fairly simplistic concept. You would only take buy trades if the Heikin-Ashi candles were showing an upward trend, and only take sell trends if they're showing a downward trend. A few options available for you then when you're entering trades, but when it comes to the Heikin-Ashi, there's options in money management too, which try and help us protect our capital. The Heikin-Ashi candles can work as an exit indicator in the opposite fashion to how it works as an entry indicator. So if, for example, you were in a buy trade, you could exit that trade when a Heikin-Ashi candle forms, which indicates a downtrend, reversing your signal. And if you're in a sell trade, you could exit once a candle forms, signaling the start of an uptrend instead of that juicy downtrend you were expecting. You can also wait X amount of candles for confirmation before you exit the trade. Maybe you don't see one Heikin-Ashi candle going against your trade as validation that the trend has ended, so maybe you want to wait for 2 or 3 candles to run against you. There's also the option of using previous candles as your stop loss. If you're someone who's under the impression that an upward trend was forming, so you entered a buy trade, you could set the stop loss at the lowest Heikin-Ashi point from the previous periods. Here's an example chart where we can pretend we are taking sell trades only and we're entering at the open of the second orange candle in the pattern. This would be our first trade entry where the aqua colored arrow is pointing to, and so our stop loss is placed at the high of the last blue candle from the previous pattern. Then our second trade entry would be down there towards the middle, and again our stop loss is placed at the high from the last blue candle. And here's one final example in this downtrend where we'd get an entry and where we'd put that stop loss. A couple other variations of this method are available. Instead of using the high from the previous blue candle, you could place the stop loss at the high of the entire previous range of blue candles. In our middle trade, we can see out of those 2 blue candles that came before, the first one actually has a higher high, so the stop loss could be set there instead of the high from the most recent blue candle. You could use it as a trailing stop loss too. So on our third trade in the downtrend, where we entered after the close of the first orange candle in the pattern, and we placed the stop loss at the last blue candle 2 periods back, we can move the stop loss with the trend and leave it 2 candles behind the current period until eventually the trailing stop loss triggers on a price retracement at the bottom of the move. I will say though, you really do need to catch a good trend for this to work. In lesser trends, an anomalous high in price could swiftly trigger the stop loss and cause you to miss the second half of a decent trend. It is there as an option though, along with the other methods we've discussed that the Heikin-Ashi has to try and guard your capital. In the markets though, traders can use Heikin-Ashi across all types of asset. There isn't some special market where Heikin-Ashi rakes in profits, but a different market where it's failing to the highest magnitude. You can give it a go anywhere. Also, if you're not used to Heikin-Ashi, don't forget that when you're looking at the close of the Heikin-Ashi candle, that is not the current price. Your mind can fool you from being so used to seeing the Japanese candlesticks, so make sure to keep up either the bid price or ask price line on your chart, just so you don't get caught out. And even if things do feel as though they are going swimmingly in some nice trends you've caught, Heikin-Ashi can still end up in the range. Look at this for some back and forth action on the candles. You better hope you took some profits on that mini uptrend in the middle, because you are going to take losses on the rest of it. Your account balance and anyone who is financially dependent on you will feel betrayed if you start taking every single back and forth Heikin-Ashi signal that's occurring here in the range. In conclusion, as we said, the Heikin-Ashi candles, they aren't like the other candles. Their aim is to try and smooth out the price action so that it gives you a clearer structure of the overall price trend. That's if there is one. But even in a range, price will likely appear smoother, and whilst it can get choppy out there, it probably won't be as bad as the traditional Japanese candlesticks. All of this means that Heikin-Ashi candles can be used as an indicator for both entering and exiting trades. Probably not ideal to use them in both those roles at the same time, but either or has the potential to be effective effective when combined with the right indicators. You are going to have to mix them with other fundamental or technical indicators to try and find that golden touch that is a consistently profitable trading strategy. That's it for the video, but there is of course more information in the description, and never ever forget that every single chart in this video has been specifically pre-selected by me for showing you how price structure may or may not work. We certainly have tested Heikin-Ashi candles in live forward testing strategies though with real demo money, and so those will also be linked in the video description. This is Project Trade. I am the candle maker. We are the traders of the lost chart. Thank you for watching or listening.